Welcome, G3 investors. Let's take a look at the week ended March 24th, 2023. Well, stocks closed up on Friday in a volatile day, and it was a volatile week for the markets. The NASDAQ on this chart here gained 1.7% for the week and 3.2%. It's gained 3.2% for the month. As you can see on this chart, the NASDAQ closed above this green dotted line, which was resistance at 11,600. And we have a positive crossover here, or a black cross, where the 50-day, the blue line, crossed over the red line, the 200-day. So the NASDAQ looks like it wants to get back into an uptrend here, but that's not going to happen until it gets above 12,200, around 12,300 for me. Now, if we take a look at the S&P 500, it's a similar chart, although it's a little weaker. The NASDAQ gained 1.4% weekly, but it broke even month to date. And you can see it is closed just above. It closed at 39.71, just above the 200-day moving average at 38 or 39.32 here in the red. For it to really resistance at 4,100, and for it really to, for it to be considered a true uptrend with a series of lower highs and higher highs, it has to get above this 4,200 level here. And if we take a quick look at the Russell 2000, it is the weakest of them all. It's the weakest of all the chart. And the Russell lost 8.5% this week, and it's well below its 200-day moving average. It closed at 1,735, and 1822 is the 200-day. But really, it has to get above resistance here at 1,900, and then to be considered a new uptrend, or somewhere around over 2,000, like 2020 or something like that. So that's a 16% move. So the Russell has some work to do. Now, if we look at our ETFs that we trade, we could see that technology ruled the markets this week. Here's the NASDAQ 100, which is a tech index. And you can see a positive cross with the 50-day over the 200. Good move. Right back up into resistance at 315. So it's made a nice move here, but it needs to go a little further to really establish a solid new trend. If we look at XLK, which is the technology sector itself, it's just a little bit better than the NASDAQ 100. A little purer here, and it's moved above resistance at 144 there. And then the big mover usually is SMH, and again, that one's looking pretty good. So we've established a new trend for those two, and the NASDAQ 100 is not far behind. Now, the strongest ETF last week was aerospace and defense, and it actually got weaker this week. As you can see, it's starting to pull back. It's still above its 200-day, but it's down below its 50-day, and it doesn't, it's got some work to do to get back up to 115 here, where we would be interested in buying a position in it, and then on above 118, which would be new 52-week highs for it. So it's not a weak one. It's just holding up. That's what I call that one. Now we've got just a few others I want to look at here. Here's the industrials. Again, it's going sideways. It got weaker from this move at the start of the month. It started up and then it went down. Now it's hanging out just above its 200-day moving average. So, it's holding up, but it's kind of weak. So there's a lot of iffiness in this market. And now there's the housing or the home builders ETF, and it looks a little bit stronger than the industrials, but it's got the same sort of look about it. And last but not least is aerospace and defense. Again, here's one that was on its way to a 52-week high, and we pulled back. I think I went over that one twice. Anyway, so that's how the market looks, and everything else, no matter what we look at, if we look at the financial sector, which is taking it on the chin, that's clearly in a recessionary or a downtrend, if you will. It's way below its 200-day moving average. If you look at, let's see, XLV is healthcare. That should be a strong sector, but it's not. So everything else is in the doldrums. So we're still looking at a market that might not be able to pull up out of this move. This move may just be considered a bounce off the bottom. We don't have enough information. We need more information on the market before we can make a determination on that. All right, let's take a look at how our model is done. Well, we've done pretty good. Current month-to-date gain is 18%, 51.2%. That's their gain. Year-to-date through March 23rd. That's supposed to say the 24th. I put an extra 3 in there. Sorry about that. And then if we compare our benchmark, year-to-date, we're crushing it on the month and year-to-date. But year-to-date, we're crushing the S&P 500 here by 47.8 percentage points. And the NASDAQ G3 is better by 38.2 percentage points. So we're doing really well, and over 80%, 82.6% of our gains, trading gains, have come from the short side. So that shows you that we take advantage of the markets, whether they're going up, down, or sideways. And this has been a downward market from the beginning of this year. Before I go, I do want to take a look at the heat map real quick. And as you can see, there's quite a bit of green. And again, it was the tech, the mega. There's Meta, Google, Apple, NVIDIA, Adobe, Accenture, Netflix, and Tesla, all making real good gains. Now, there's a little bit of biotech and medical instruments making some gains there. There's Exxon and Chevron holding up pretty good. And then here's the weakness. Last week, it was the regional banks that suffered. Now, some of those recovered during the week, but the major money sitter banks, they got in trouble and pulled back a little bit, if you will. Well, that's all for this week's video. Next week, we have economic reports coming up for retail sales, housing prices and housing sales, and personal income and personal spending. I'm Greg Gallagher. Good luck and good trading. See you next week.